What up, Top G traders? This is your man for the hour, Curtis. And I'm about to show y'all some things real quick with SP 500. And also, while we're looking at this, we're going to talk about accountability. All right, daily wise, we have supply zone right here on SP 500. And as you can see, like I've said on the other video, the market loves to fill gaps. See this big gap right here? When we were down here, and obviously there's the zone. Sometimes what happens with our trades is it'll wick above the zone, and that's just trapping more sellers just to push back up. And sometimes that can stab us out. So if we ever get into a trade that's like this, which this happens, where we're in this buy and we get stopped out, we'll just have to wait and see what happens. But most of the time, they'll just turn back around and then go our direction. So we'll just get back in, no big deal. But again, see how this was an imbalance, what we call them gaps. This gap got filled. See how it filled up? And this was once it filled up right here, this was actually a zone. So let's put that in. This was a zone at one point. But as you can see, it got broken because, always look at the, I was looking at the news. The news was Bloomberg was talking a lot about the stocks rebounding. So not only did this move have to get filled, but we got to keep it smart, guys. This move is a part of the whole idea too. It got to be filled. It filled that whole thing in. So this gap got filled. This gap got filled. Here's the supply zone, and that's why we had this nice little tip over, and probably tag some people out if they put the they put their stops like this. They probably got tagged out, but that's when you just wait again and you get into the trade. So you just got in and you would have had this nice, beautiful sell that's coming back down to this zone. Because when it comes to supply and demand, you got to think of it this way: rally, base, rally, then it based right here, then it dropped, then base. You can see that was a base also on a lower time frame. I just take them off because you don't want too many on there. Because that was a good little setup that I put on the chat for Yash to see, and it went directly right here, Yash, and it hit the TP, and then from here off this supply zone, off the H1, it rallied up because of Powell was talking, and as soon as Powell said he's still hawkish on the dollar, indices dropped. So from this point where we're looking at, I mean, I was too busy looking at EuroCAD, but if I would have saw this, we could have had that short position. Just wasn't paying attention, and we could have ride that mug all the way down there, and we'd have been I would have been closing half my position out and been chilling. But that's probably where it's gonna go. The reason why we come back over here to the daily, and you see now the uptrend created gap right here, gap right here. So now what we're looking for is play games. I'll probably go. All this goofy stuff is noise. Finally, it taps here, and we could probably get a nice little trade off here. Then it tap it again and come up a little bit, maybe to fill in this gap. It might come up again, tap. But I think if it's not on the uptrend, which we see that the sentiment looks bearish, it might just drop down, break this to come down to tap this. And when it taps this area, then these gaps will be filled. These are gaps too. This gap pretty much got filled by this gap. It's a mirror. It mirrored that. So once it come back down here, gaps are filled. Now, we could probably get something like this and then start heading back up, or maybe it'll head back down. Let's see what the sentiment is, and I'll put Bloomberg's their channel on the Discord, because the beautiful thing about trading is this: it's not just candles and stuff like that, guys. It's fundamental and technical analysis together. If I'm looking at Bloomberg's talking, and while they're talking, the market moves as they talk. So let's just say hypothetically, like I saw this move. It was coming up here. Powell started talking. I knew that there was a supply here on the H1, but I was too busy looking at EuroCAD and caught some pips for EuroCAD. So here we are, this supply right here, and he starts talking. It market rushes up, creates this, comes up to this order block, and guess what? From this order block, we had this big drop down. Now, honestly, um, see, I put this trend in here, when it broke it, I would have got it off the M5, honestly. Now coming over here to the M5, like I said, you guys are gonna master the M5 with me. I'm not playing games. So you know that this was an H1. You come over here to the M5, and right there is the supply for the M5. Once it tapped that supply, and I saw that big move up, and it tapped that one and that one, we could have got in right there after the tap. Stops below, I mean above, and you could have had this whole move down with a small stop loss. This can be done. Yeah, most of the time you'll get stopped out, but with supply and demand and smart money concept, Wyckoff theory, all these things, you can get this 1% for damn near 10 or 12% moves. You can get them. You might get stopped out a little bit, but you can get these moves. They happen all the time. You just got to come over to the M5, and if it was a good move off the daily or blah 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 blah, you can get it. So basically, that's what we're looking at for SP500 to continue to probably come down here, and then they'll have a nice little reaction off it. Not sometimes they'll come like this and just tap it a little bit and go up, or it can go deeper inside of it, then go up, or sometimes it can go and close like it did right there and come down and play games, then come up. Either or, we'll be there for it. We'll trade indices, but we're not going to trade indices every day. We'll only trade indices when we see our setup. High probability setup, we'll trade SP500, NAS 100, US 30. But if we don't see it a setup, there's no point in taking it. Now, the rules of this with Top G trading. We're not going to trade 7, 8, 9, 10, 20,000 trades. The more you open up a position, the more you're risking to putting risk on your account. So the best thing that that made me profitable now is putting in like maybe somewhere in the range of 5 to 8 trades a week and managing your account well. Like if you're up for the day, you don't need to trade no more. Step away from the charts. So we're not going to sit here and just be every trade just chasing it, chasing it, chasing. We got to get out of that. No more chasing trades. Be patient, especially if you have a prop firm account. Be patient. Or if you're dealing with your live account, be patient. This takes time. You can't rush this stuff. The market doesn't care about your buys and sells. They don't care. They making their money. All right, let's I wanted to show you what I did with EuroCAD. I was too busy looking at EuroCAD, and honestly, I caught this whole move. I wasn't even gonna trade. I hate trading on Fridays. But when I saw it come up here, when it wicked all the way up here, uh I closed out like something like that. That was my trade. So that was looking at about around 74 pip move, just because the news pushed EuroCAD up into the supply. And again, I'm gonna keep saying this until you guys understand. European interest rates. This is why we're gonna be watching Bloomberg. I'm gonna have y'all watching the news and stuff. This is not just about candle charts. It's about understanding the interest rates of the currency pairs. You understand the interest rates of the currency pair, you won't be looking for reversals until it's time to look for it. So, like I said, EuroCAD is literally in a damn recession right now. Euro. So every pair is on a downtrend. So since Euro's on a downtrend, we're not gonna sit here and try to look for reversals. I don't want none of these buys off here. This is going to have to prove to me that it's a buy. Until then, we're going to keep taking it down. We're just gonna keep taking it every time it pull back to supply, fills in the gaps, give us a high probability uncontested trade. We just taking it. We're gonna keep taking it until it's time for the European Union to say, "Oh, our interest rates are better. We got things together. We're good." Once they start doing that, then we'll start looking for reversals on Euro CAD, Euro Swiss franc, Euro dollar, Euro New Zealand, Euro GBP. All those will start looking for sales. But until then, European Union has terrible interest rates right now. We're looking for sales, high probability sales setups. That's it. That's why I've been putting sales on them. If you haven't, in case anyone has not been knowing that. And again, Canada just recovered. So I was. This is why I said fundamentals is very important. Canada just recovered from the COVID. Like they were the last, I guess, the last country to start recovering from the COVID. So a lot of Canadian pairs are doing pretty good now. I mean, USD CAD is obviously continue going up because of our interest rates, because of the recession, and because of rate hikes and them being so hawkish on the dollar. So obviously, the U.S. is going to be a little bit better than Canada, but stuff like CAD, Swiss franc, eventually we're we're looking at some of these areas on CAD, Swiss franc. It's for first of all, it's already uptrend on a higher time frame, so it's been pushing up CAD, Swiss franc. We closed. Look, it closed bullish for the week. The monthly candle is still bearish, and the reason why I did that is I'm just reiterating that was a monthly demand zone right there. In case you didn't see that, look where it tapped the zone, and went up a little bit. So we're still on a uptrend. So I might be cash Swiss franc. I might be looking at real closely, but we might get some pushes maybe on an hour. If the opportunity presents itself, I'll trade cash Swiss franc because Swiss franc has stern interest rates. That's why a lot of people don't like trading Swiss franc pairs. Swiss franc doesn't like changing their interest rates, and it is what it is. That's why it's a safe haven. So yeah, see that tap right there. This could start coming back up. So if it does, we'll catch a buy on cash Swiss franc. But yeah, definitely. So now this is the part of the last part I want to talk about is accountability. Yes, I'm gonna be giving out trade signals. Yes, I'll be getting like maybe 5 or 6 trades a week. But it's still up to you to put the trades in, use the proper risk management, and close. If you want to if you wanted to go to TP, that's fine. But if you want to close it out early, that's fine. But here's the problem: don't close out winning trades early and allow trades to hit stop loss because longevity, that's not going to make any sense. So you want these trades to hit TP. So I'll do a really good job in making sure maybe we'll have like a system where there's a TP1 and then that TP1 to be like 1 to 1 or 1 to 2. Then TP3 and beyond is optional, but at least let it hit TP1. Because the last thing you want to do is have a whole bunch of trades that hit stop loss, and then a whole bunch of trades that were in profit that you closed out. You got to think longevity. You ain't gonna make no money that way. You got to let your trades run. Um, so with that being said, with my trades, I would like for you to risk, if you can, if you're doing a prop firm on them. I don't trade every day, so it's going to be really tough for you to do the prop firm because they want you to trade every day. But when you put my trades in, half a percent risk 0.5% for longevity purposes. So we're still going to use strategic risk management with these trades, but we're going to make sure we're not trying to flip your main account. You got an account on the side you want to do that with, that's cool. Do that. I do that sometimes too. But with your main account, be professional with this. We're professionals here. We're trying to be professional. Risk 0.5%. I wouldn't even risk 1%. The reason why I'm not risking 1% because one day when you have a $1 million account, 0.5% is going to be enough for you to live off of. So we'll deal with, if you want to do 1%, that's cool. But longevity wise, risking 0.5% for me is cool, and that's what I'm going to advocate for you guys. Now, you guys, like I said, do whatever you want to, but that's cool. Second thing I want to talk about is we're going to have homework that you're going to turn in every week, showing me a high probability uncontested zone trade. I need you guys to understand all of that because eventually I want it to the point where you guys learn how to trade on your own. And we're not going to be using a whole bunch of indicators and all this other stuff. We're going to look at the charts, and the charts is going to tell you what the next move is going to be, not the indicators. Indicators will always lag, always. So we want to count. This is what I meant by accountability. There's going to be accountability on my end and on yours. Do the homework, understand this stuff, get the information, apply it. No more game plan. We don't have time for this. Look at this Euro cat. Look at this. When moves like this happen, I can only expect you. Look at this. It's just gonna come back up here, double top, and then drop. But anyways, yeah, accountability. So we're gonna have the homework. Let me show. So homework will be right here. We'll have your homework right here. I'll put the videos in the video section right here. The signals will be right here. I'll do a close report every week. Last week I only did like 3 trades because there are gonna be times I'm gonna do like only 3 or 4 trades. Why? Because of how the news is. If the news is acting weird, I being in no position is also a position too. So there's no point if I don't see a trade setup, I'm not taking it. This ain't gonna be one of them signals where places where it's just signals everywhere. No, we're taking high probability trade setups, and that's it. Even though I took 3 trades this week, USD JPY 200 pips. All New Zealand and hit stop loss. That's cool. Whatever. It's not ready to drop. And then US oil, we made 85 pips off that. We had to modify the stop loss a little bit because we saw that it was playing games at the supply zone. But it's okay. I closed it out at 85 pips. Still a profitable week. Even though that's only 3 trades, you still came out profitable. If you risked 1% on that USD JPY, you up like 2.5%. Then this oil, I don't know. I'm not quite sure what was the risk to reward on oil. I think it was 1 or 2, and it was almost at TP. Closing that out like 1 point something percent, and then that you're still up. This is longevity. We're not trying to rush to be rich. We're not trying to rush. We're gonna slowly, meticulously take our time, take the trades, and take each other's trades. Eventually, we'll have more people in this group where you can have the chat room where people can talk and give their own trade setups here, and people will take their trade setups. And then we got the general chat where I'll come in here and talk about the news and little things of that sort. And we go from there. Just keep it simple. It don't have to be complicated. We just learn from each other and earn. That's it. So with that being said, hopefully you understand the plight of top G trading, and I'll see you on the next video. Peace.